In this article, we will explain how to use price momentum in Forex and stock trading. We will start it by sharing some idea behind the profitable trading strategy. First of all, trading is an applied science. The profit for day trader comes from the good discipline driven by fact and evidence. Likewise, the profit for any systematic trading is the fruits of the good market analysis driven by fundamental and technical knowledge. To access more profits as a trader, you will need an improved discipline and technological advancement together, allowing you to see the predictable behavior of the financial market. Many traders will highly emphasize that the technology is the key to success. Many will agree that the good automated indicators and tools will provide the edge to the average trader. It is the growing trend in the modern electronic trading environment. Then where the profit comes from the regular movement in the market. That is something we can analyze and can make use to predict the next movement of the financial market. These 5 regularities shown in the figure 1 are typically what traders are looking to catch in their trading. We highly emphasize to look for or focus on the 5th regularity in your practical trading. The 5th regularity says that the price in the financial market will move in the zigzag path. Mathematically, this is described as fractal wave or repeating patterns. Fundamentally, these happens to balance the supply and demand force. Excessive momentum is the technique to identify unusually strong supply or unusually strong demand by analyzing the price series. Why do we need to care about the unusually strong supply or unusually strong demand in our trading? It is because unusually strong supply or unusually strong demand are the sign of the end of the current trend or birth of new trend. As you probably guess, when the new trend is born, you can write the highest profit as possible. Hence, the excessive momentum can provide you the attractive entries for your trading. Okay, so far, I explained some introductory part for this article. However, I am not going to read out the entire article for you because the article is freely available for you to read. Please visit this article link. No sign-up or registration is required to read this full article. Just read it for your own good and for interest. That is it for now. I hope I stimulated some interest on technical analysis for you. We hope you to enjoy growing knowledge. Then thanks for watching this video.